Okay. So, so far, whatever we learned, do you guys still have some questions?
Uh, yeah, I had something, but I would let Sandil, oh, sorry, Sachin go first.
Mm.
No, I think good. I think I had a similar question on Nvidia. Feels like there is so much they they just wait to just validate and then sell off because I think it validated the results and so that. But it was interesting what he told.
So my question was, yeah, yesterday when I was observing
Mm-hmm.
the chart based on
Mm-hmm.
what you sent, and then this morning when I was looking through,
Mm-hmm.
I do see that it kind of came into the same order block or order break, what we call,
Yeah.
uh, or last, I think, when was it? From April? No, sorry, June or July. One second, I marked it somewhere. Let me open it up. Give me just 1 minute. So I was checking it on a day chart, and I did find that it kind of came back to the same position. But one thing which I'm curious is, like, if it is coming back to the same thing, my question is, let's say futures prop accounts, we have a limitation of closing it on the same day, that is within 24 hours.
Yeah.
So prop account might not work well for the question I'm asking. So let's say even if I am buying an option,
Mm-hmm.
I let's say I buy an option of September or October,
Mm-hmm.
assuming that looking at the market, first tell me if my understanding is right, because I don't think it is accurate. So I just want to clarify. So I buy an option of, let's say, QQQ
Okay.
of October 29th,
Mm-hmm.
let's say, tentatively. And then assuming that looking at the break, how it went, saying that, okay, it would again fall.
Okay.
What would happen to my premium? Because each day the premium kind of changes, right? Today, let's say I'm buying at $2,
Mm-hmm.
tomorrow the same date might be less or more, whatever.
Yeah.
So would my premium completely go waste if I hold for that long? Our options are not meant for that at all.
Generally, with options, you are fighting two battles, right? One is what they call theta decay, which is essentially time decay. So even if, for example, if the market is basically the same place for that entire duration, your option premium will always keep going down because
Hmm.
every day, whenever they apply that whatever I think black scholes or something they call it, that formula. So essentially, the premium will go down. Okay.
Hmm.
So that is one. The second battle is whether it is going in the direction that you want it to go to. Okay.
Hmm.
Okay. So in case it is actually going in the direction that you are expecting it to go to,
Hmm.
then it's okay because then the premium will increase because it is in generally the same direction,
Hmm.
right? So that will overcome some of that theta decay, but not all of it. So
Okay.
it has to move drastically towards that value
Hmm.
for the premium to overtake the complete theta decay. Okay.
Okay.
So holding options long term is not a good option.
Got
Not really good.
Yeah, I think
Okay.
that makes a
So
lot of
that
sense.
is why what they always do is meaning people do take a thing, but they say that selling options is a much better idea than to actually just buy a long or a put.
But for selling option, let's say if you're thinking about QQQ,
Mm.
uh, you need to have into 100. If you have one lot, you need to have 100 lot worth of
Yes.
money in your account. You cannot
Yes.
blindly sell.
No. You need to have 100 shares of that.
Right.
Then only you'll be allowed to sell.
Yeah. So
Or,
if
yeah, or money also, I think. Either way, but something. Margin has to be covered.
Oh, if I already have purchased those stocks, then it's fine, is it? Or
Mm,
it is only
yeah,
if I have the money?
I think both,
Hmm.
but in general, if you have the shares, then you can put that as collateral.
Okay. Okay.
So there's
Perfect.
something called a covered call, covered put, and things like that. I think that's
Hmm.
what it means.
Okay.
Even I've not done that many, but I think that's exactly what they use to do that. I don't
Okay.
know if you need extra margin requirement on top of that or not.
Okay. Perfect. And then looking through this chart of yesterday versus how it kind of fluctuated,
Hmm.
if I look at it, it came back yesterday, it came back to a position of 19th April or somewhere here,
Yeah.
2nd May.
Hmm.
Came back to 2nd May. This is when we started our session where you took the same example
Hmm.
of 2nd or 5th May. It came back to the same position.
Yeah.
So market is always like this, is it? Because I was seeing multiple charts. So it
Hmm.
always goes in the cycle and comes down.
Yeah.
Okay. And then the other question I had was like this indicator, whatever we have added.
Uh-huh.
I know you are at a stage wherein you can identify FVGs easily, but for us, indicators are really helpful. But the thing about FVG which I have is,
Mm.
can you kind of today, if possible, give me again an overview of volume imbalance negative or volume imbalance positive, and
What I
how
did
much
talk to you.
impact does it
Yeah.
make? And apart from that, what was the other thing I had? Yeah, this all I'm trying and understanding it. I think it's all helping, and these imbalances completely also helps
Mm.
on where the market flows.
Mm.
Yeah, I think with that I would stop sharing.
Okay. Fine. Okay. Cool.
Yeah. See, just going back to the Nazir's question, right? So if
Mm.
I know like Nvidia share like will be 130 by let's say 3 months, it'll
Hmm.
definitely cross 130, na? So then, I mean, likely 70% chance it'll go. So buying a 3 month option is not a good idea still.
No, I think you can. If you're absolutely certain that it'll happen, then yes, you can go ahead and do that. There's nothing stopping you from doing it. But the thing is, with options, it has to move in that direction, whatever you're intending. Then only you'll make money.
Yeah, right.
Because otherwise, the premium will go to zero.
Yeah.
Okay, so you always have that issue.
Yeah, the problem is even though it goes down and still come back 2 days before up, still you lost your money with options, right? Your time
Yeah,
decay will kill that one.
yeah.
Uh, Vinay, one more thing which I
Uh-huh.
kind of had along with volume imbalance. The other thing which I wanted to get clarified was uh, with regards to these GAN boxes or Fibonacci. So I think I had put it for 5 minutes or something like that here. One sec.
Which Fibonacci are you talking about?
Like the GAN box in terms of understanding what would be a good trade and all, right?
Oh, okay. I haven't come to that yet.
Oh, you thought about GAN box.
Yeah, meaning that was just a premium and discount, right?
Oh, okay. So,
Okay, so it's basically whether you're in premium or you're in discount.
okay, okay.
That's the only idea. Just keep that idea in mind. It is very useful when you do your trades also. But the actual trade entries, right,
Hmm.
are very specific.
Okay.
Okay,
Okay.
so that is when we start discussing entries, then I will actually tie in the dots together for most of the stuff that I've talked to you about.
Hmm. Okay.
Because right now I'm still just trying to get some basic information to you guys
Uh,
so that when we talk, at least you can refer back to what we had discussed and the slides that we have, and that'll give you, oh yes, we talked about, oh, this is what it means, oh, this is what we are discussing, so
oh,
it becomes easier to do that. Okay.
okay.
Huh?
Perfect. Fine.
So because the next step that we need to be able to do is to be able to analyze hindsight charts. That is
Hmm.
important.
Okay.
Now you've gotten to a point where you can look at the chart, then you say, oh, okay, now I actually understand that this is why market is moving in this way. Okay,
Hmm.
why did it stop at this point? Why did it turn from this point? Okay, so now at least you have that basic information. Now we'll get to basically start looking at a little more details about how it works.
Okay,
Yeah.
sounds good. Okay.
Okay.
For me, I think the most important concept is the FVG.
Yeah.
I thought the fair value gap.
Yeah.
At least it is a prediction of what going to happen. Rest feels like more of hindsight kind of thing. So,
Yeah. That's fine. You'll get to it. You'll figure it out. Okay. The when we start doing the analysis of things, right? When we try to anticipate future,
uh,
right? That is when you suddenly realize why some of these things are very important and critical. Okay. Okay. So last time we discussed the economic calendar. Okay. There are two things actually we discussed. Three. One is the MMXM model. Basically, there's a buy and a sell, right? And I told you this is the pattern that always happens. This is a pattern that always happens. Okay. And you will start seeing that because even this week, if you see, right? So it went all the way down, then it went up. It came back down again, but you can see that model. You can see there's always a V pattern every time you look at the charts. Okay, and it'll become very apparent. And it happens on every time frame. Okay. Then we talked about time frame alignment. I told you what is the analysis time frame that you need to use. Okay, and how you can look for entries on a entry time frame. Okay, so basically for longer term, you're looking at monthlies and weeklies, and swing trading, you're looking at dailies or 4 hours essentially. And for intraday, you're looking at 1 hour and 15-minute time frames for the analysis. Okay, and of course, your entries are accordingly on the lower time frames. Okay, and then we talked about the economic calendar. I told you that there are certain news on certain days, which is the reason why things actually move. Okay,
Mhm.
hmm.
now I'll actually show you what I mean and this and how it actually works. Okay, and you can start seeing a few more patterns, but at a higher level. Okay, and you'll be able to anticipate certain things happening on certain days. Okay, so typically these are the kind of news that you have in the market. These three at the top, NFP, CPI, and FOMC press conference. These are extremely high impact news events. Okay. And practically what they tell you is until that news comes, don't trade. That whole week, don't even touch it. Okay. That also there is a little bit of leeway in when you can actually trade and don't trade and things like that. But most of the times, yeah, it becomes very, very difficult to trade on these days. Okay. Because what they're essentially doing is they are essentially taking liquidity from all the market participants. So they just keep going up and down and doing all sorts of, monkey business so that when the actual news hits, they can take it in the direction they want take it to.
Hmm.
Okay. And normally you can never ever be able to trade the news event itself simply because you will not get the feels. They will move it within seconds from where they want it to where they'll take it. So in between, it'll become impossible for you to get a really good fit. Okay, so you cannot really trade the news itself for these. Okay, but this set actually gives you the trend about what's going to happen, typically for the month or for the next few months and kind of a thing. So it gives you the indication. So these are high impact news events. Typically, everything else can be traded. Okay, every other news event can be traded. Okay, so there are medium impact news events. These also move the candle a little, but not as much as the top three. Okay, so PPI typically moves. You get your GDP reading, it moves. FOMC meeting minutes, to be honest, when they release it, it moves. But yeah, I honestly don't like that particular one. But yes, you can still trade it. Okay. And then you have lots of low impact news events. Typically, some of them are at 10 o'clock, okay, on some days. Okay. So these are the news events that typically happen. Okay, uh, and typically when you look at how market is moving during a week, you need to look at the calendar, and then that will tell you how the market is actually going to move. Apart from that, there are other things like speeches by Fed speakers, which are typically not on the calendar, and they keep coming and going whenever there's a event. So when they are speaking, also market will just go crazy. It will just keep going up and down depending on what that person says at that point of time. Okay. So even during Fed speeches, I always found it very difficult to actually trade because it'll come and take out your stop loss, then again go back and do things like that. So typically, it's always difficult to trade during those times. Okay. So, um, so today, what I wanted to talk about were things called profiles. There are weekly profiles and then there are daily profiles. Okay, so weekly profiles is what will give you the probable daily bias. Okay, which will tell you, what are the good days to trade on and when you can expect expansion. Okay, when I say expansion, it means the day when price will move in a certain direction, and where you can actually make a lot of money. Okay. Typically, it also will also give you an indication when the low of the week or the high of the week will get hit. Okay. So understanding how a weekly profile could happen will give you a very good understanding of, how to manage your trade and on which day you can expect that it will go down and which day you can expect that it's going to go up. Okay. So what are these weekly profiles? Okay, there are a few simple ones. One is a classic expansion. Okay. Where essentially starting Tuesday it just keeps going high, 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 makes the high of the week on a Thursday, and then just falls on a Friday. Okay. So this means that they're essentially, they want to keep on expanding, and Monday they just consolidate a little, or sometimes even on Mondays it expands a little, but then the whole week goes on in one direction. Okay. And those would mean that we are in a very extremely bullish scenario. Okay. And sometimes you see a consolidation reversal. The reason you see a consolidation reversal is because, for example, in this case, Monday came down, to, Tuesday went up, Wednesday came down, Thursday went up, and then finally Friday is the day when it goes up. Okay. It is because there is some news that they're expecting on Thursday. Okay. So typically, until then, they will try to just consolidate, and then on when the news comes, then they will do an expansion in either thing. Okay, so this is the other profile that typically happens. And then there's a midweek reversal. Okay, Monday, Tuesday, and then on Wednesday it'll expand, or on Tuesday it'll expand. Okay, so the reason for this is because typically you have news on that day. Okay, so Wednesday is typically when you get CPI. Okay. So Monday and Tuesday are difficult to trade because they're just doing a consolidation. And then once they get the news, it just explodes. Okay. So things like that. So depending on the type of news, you can see that these profiles will start working out. Okay. So for example, this week, everybody was waiting for Nvidia, right? So all the market did was it just went up, went down, went up, went down, and then finally the Nvidia news came. They didn't like it, but they still took the market down just to fool everybody, and then they took it up in the morning. Okay, the whole night they took it up, and then again they did some consolidation and just managed the thing. Okay. So typically earnings also tends to act as a kind of a news event, especially highly anticipated news. Okay, because Nvidia has been the one which has been driving the market essentially. So it became a high impact news that everybody kept waiting for. Okay. So then that essentially tells you that this week is essentially not a great week to trade until the news comes out. Okay, so that's how you need to take a look at it, and then you'll decide which are the high probability days for trading and which are the low probability days for trading. Okay, and then there is a profile which essentially it says a TGIF profile. Essentially, what happens is the whole market has just gone up in one direction. So on Friday they take a breather, and then they try to cool down the market by bringing it down by roughly to 20 to 30% of the entire move. That's typically a profile that tends to happen. So every time you've seen a profile where which says like from Monday to Thursday it's gone up, on Friday afternoon you can expect that they'll bring it down a little. Okay, and what ICT says is typically they bring it down somewhere between 20 to 30%. Okay, questions?
Yeah, makes sense.
Yeah.
Okay, so we'll just use yeah, okay. We'll go to the charts now. Okay, so that we can actually see how this works. Okay, and if you had some questions on this, then I can we can discuss that also. Okay, let me get rid of all this. Now. Maybe I'll just change it to NQ. That's better. So,
So this is the weekly chart.
yeah, Sunday starts somewhere here. Okay. Okay, so what did market do? This was the previous week. Okay. You know what? Maybe I can put this way. Maybe this is easier. Yeah, I think we'll use this. We'll use the daily chart because these are daily candles, right? So this was Friday, this was Monday. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So last week the there wasn't any big news. So essentially what they did was they just consolidated a lot, right? So they went Monday they expanded, Tuesday they came back, uh, Wednesday they went up, Thursday they brought it down. Okay, but they essentially stayed within a consolidation profile itself. Okay, that's typically a seek and destroy kind of a profile. Okay, this week if you look at it, right, you're expecting the Nvidia news, so they slowly just brought it down, brought it down, brought it down, came up and took it up. Most likely Friday again it's gonna go up. Most likely. Okay. Because if you look at this, these are equal edges here. So many equal edges. They need to run this out to take liquidity. So they'll probably take this one out. Normally, if you see such equal edges, right, they will try to take it out because lots of people have their stops here. A lot of liquidity on top here. So they'll try to take that out at some point, either this week or next week, but they will try to take it out at some point of time.
So that point is like an FH, like a fair value gap, or why you think there is too many
No,
people there?
this is like I said that there were old highs and lows, right?
Huh.
These are all the old highs, all the highs that that were left behind. So that means people have sold from this point. They sold and sold and sold. They didn't allow price
Ah,
to go up. So they have a
correct.
lot of buy orders here as sell
Ah,
stop as stops. Okay. So if they need more liquidity, they are going to go right up, take that liquidity, and then keep going up.
mm.
Okay. So norm because it's a simple idea, right? You just like what they call a this is like a triple top, right? It's a triple top pattern. Okay. The
Okay.
more you see some of these things, the more likelihood that it'll get run out very fast. And when it gets run out fast, it'll just keep moving very, very high, very fast after that.
So the idea is that more people have sold at that point.
Yeah.
Means that also a lot of people will buy when it came down, right? Or ऐसा नहीं होता,
Yeah.
it
That
doesn't.
means that now market makers will try to move it up there so that they trigger all those buy orders.
Uh, no, I'm saying that at that point, that parallel red line, there
Mm,
people have sold,
yeah.
so that it came down.
Yeah.
So then the idea is that they will not buy when it is low.
No, because they put their stop orders here.
Stop orders.
It's always about stop orders.
Mm,
Okay. So they have a whole lot of stop orders because they sold, they have buy stop orders.
okay.
Okay. And these are just like limit orders, right? They've just left the limit orders there. So what's going to happen is that now that you've come down all the way, now they're just going to take it up.
Yeah.
Okay. And
Yeah.
the minute they run out all of those buy orders, because there's so many buy orders here, you'll see that it'll just move very fast from here, from
Yeah.
this point onwards.
On
Because it
that
becomes a
point.
squeeze. It becomes a squeeze, right?
Mm,
So they get a lot of buy orders, they just buy it and then move it up all the way up.
yeah.
So all these guys who went short here, they would have losses. And the guys, when these guys come in and take those buy orders and it moves up, they can sell somewhere at the top. They'll probably sell when it goes to this point or this point.
Is there a graph where we can see that how many volume of orders are there at that
No,
point versus this point kind of thing?
no,
No.
no. Meaning, I'm sure a lot of people try to figure that out. There are lots of different ways that they think they can do it, but then no, this data is not completely in the public domain. If it was, then a lot of people would already know what they want to do. Yeah. But you can anticipate. You can because you'll be lots of because what also happens is that a lot of these big banks they don't participate in the market directly.
Ah,
They participate in whatever is the dark something they call it dark trading. I don't know what they call it. Okay, which is basically private placement of orders because if they bring in with the come in with their huge orders then they will skew the market too much so they don't do it directly.
oh, so all the trading data is not public, huh, then?
Yeah, quite a
Mm,
bit of that is not public data. For example, if Nancy Pelosi wants to do something that will not be public, she will do it via that route.
yeah, because okay, I got it.
Or even this guy Warren Buffett and all of these they just hold way too much stock to be able to do a trade in the normal process
Yeah.
because then they will just start seeing a huge jump, huge jumps all across just because they bought or sold. So it's not going to happen that easily.
Because when you said that there are so many buy orders, it's just a hunch then, right?
Yeah. No, it's not Hans. There are definitely buy orders there
How could we tell?
because because every time people do a sell, they
Huh,
always put a stop loss. The stop loss is a buy,
yeah.
right? So that means if so many people because every time it's gone up there, it went up there so many times, and then they kept selling it down. I mean, a lot of people logically would have put their stop loss here.
Mm.
So so that way there's so a lot of stop losses which have got accumulated here. So the more this happens, more likelihood that more stop losses are here.
So
And this
stop
time
loss
it's a
is applied when you go down, right? At least I apply stop loss when it goes down. So you're talking about sell orders kind of thing, or because
no.
uh,
Yeah, when you do a sell, right?
uh,
What do? You do your stop loss is a The opposite, a buy order.
Yeah,
So if you sell anywhere here, where will you place your stop loss?
much. If you sell anywhere there,
Hmm?
okay, then it'll go up, right? Yeah.
Yeah, so it'll have to be higher, right?
Okay.
So you will put it either here or on top of this or on top of this or on top of this calendar candles, right?
So, so
So you'll naturally, if you have to protect it, you want to make sure that even if it comes and takes this out, and you are still safe. So you'll try to put it higher and higher and higher as much as your risk appetite is.
that's for options, right? Option selling.
No, for everything.
Okay. So for any data, let's say it is 120, and
Mm,
if I put a stop loss when it goes to 115,
mm.
uh, but if it's executed, so I'll put usually the lower end, right, for stop loss.
You would put a lower end, yes, but that is also a logical place, right?
Ah,
It'll be above a candle or below a candle typically.
yeah. Let's say below a candle.
Yeah, but that is because you've done a buy.
Huh.
You bought, so you put a sell stop,
Yeah.
right? So, but when it goes in the opposite direction, it's going to trigger your sell stop.
Yes.
Yeah.
Okay. I'm still confused a little bit, but it's okay. We can move
No,
on.
it's simple, right? And see if I can do this.
Because you said when you sell, you put a stop loss at the top. That's where I got confused.
Yeah, I do a sell. Okay. So I did a sell here. Okay. Um, so this is my stop loss.
At what point? 17,000.
Yeah, something. Okay, whatever. I don't care. Okay, let's assume that my target is this. Okay. So where would I put my stop loss? I'm putting it on top.
So
So
what did
what
you buy
happened?
it for here?
I
He
don't know. I just some random
he
value.
kind of
I
bought
didn't.
a put, right? It was not
Oh,
a
it's a put, right? That's what I'm asking. It's like option
No,
trading, right?
no, it doesn't matter.
no. In futures also you buy puts, right? Whenever you sell a stock, that is nothing but put.
Yeah.
Yeah, so he did the same, right?
Yeah.
Yeah,
Yeah. But he's saying in stock also it works the same. That's why I'm just not
yeah.
sure.
It's the same thing. Meaning, it's like if I'm playing around Nasdaq, right? So that means it's the equivalent of me buying or selling QQQ. You can't buy the index directly. You buy it through either SPY or QQQ.
Yeah.
But even futures, I can buy 1 unit. I can buy and sell.
Yeah. So here in your case, you bought at 19,710
Mm.
and you put a stop loss as 19 to
No,
130.
I sold at this point. So my target, I put my target as whatever 18,650. Okay,
Um,
and I put my stop loss here above these candles.
yeah, I think this is where it's throwing me off. Like stop loss is down, right? This is up, ulta.
No, I sold.
You sold, okay.
If I sell, I want the price to go down. So my
Huh.
target is down.
Stop buy then, right? So,
Yeah, it's a buy. It's
huh.
a so this is a buy order. These are buy orders, but it's a stop loss,
Okay.
right? So it's a buy order because this is a see it's minus 5 here. Can you see?
Yeah.
And this is a plus 5.
Yeah.
And my target is also a plus 5.
Your target is plus. Why its target is plus five?
Because it
Because
buy.
I sold minus 5 positions. I did a short of 5 positions.
Short. Okay.
Okay, so that means I want the price to go down.
Uh,
So if I've sold, I have to buy, right?
uh,
So automatically your target and your stop loss become buy orders. If
yeah.
you buy for the price to go up, right? For example, let me close this, or I can reverse the position. I'll reverse the position. Okay. So now my stop loss will be below.
Exactly. This is
Ah,
what I do. Okay.
that is because you're buying always.
Yeah.
So what I did was actually I sold,
Uh,
right? It's a short position. I took a
so
short position before. Now I've taken a long position,
uh,
right? So when you buy, then you do it the other way around.
yeah, yeah, okay, okay. Now this is what I was clarifying whether it's option like buy, so sell positions. Okay, okay.
No, no, don't get confused with options because there you buy a put,
Mm,
right? But here, look at it as just like how you deal with stocks or mutual funds.
mm,
Okay,
okay.
options are different.
Uh,
But
So in options, you can buy a put, sell a put,
yes,
buy a call, sell a call. Whereas
yes.
in futures, it is either
No, no, no.
long
In
or
options, you can buy a call or you can buy a put. Buying a put in option is the same as shorting.
yeah.
yeah. Buying a put is nothing but shorting,
Exactly.
and buying a call is nothing but long.
Yes.
Okay.
But internally, what that actually means is you're actually shorting the market. So you have negative positions in the
Yeah.
market
Yeah.
when you do a put, even though
Uh,
you're buying. So that's why it gets a little confusing. So
Yeah.
don't equate it with stocks. Look at it as just like any other, sorry, don't equate it with options. Look at it as any other stock.
no. So in instruction, this scenario is your stop loss is like below, which this is normal, right? What I do.
Yeah. Yeah.
But what the other scenario, what I explained is what was that then? So you're trying to sell at the your stop loss is at the top. So when do we do that then? It's a
When you short the market.
when you short the market. Okay,
Yeah.
when you're shorting this to futures.
Yes.
So,
Yeah.
um, okay.
Okay.
Got it.
Okay. So don't get confused with options. Okay.
Um,
Options is completely different the way it gets managed. Okay.
um,
Let's close. Okay. Okay. So normally, typically, okay, I wanted to go here. First, I want
In
okay.
most of these charts,
Hmm.
thank God it's Friday is easily visible, but other things are kind of still kind of back and forth, right? It's not very clear
Hmm.
because uh, the reversal thing and the midweek thing, it does not happen that casual, right? Of that regular.
No, it does. It's just that you need to look at Friday. You need to look at the calendar and then you'll be able to tell how it works. So this week that I've marked, okay, this was Monday, Tuesday, Wednesday, Thursday, Friday. So this was NFP week. Okay, can you see?
Mhm.
So there was a lot of high impact news. There was also the FOMC statement on Wednesday. Okay, unemployment claims on Thursday and non-farm payroll news on Friday. So this week was particularly very heavy. Okay, so see what happened. Monday there's no news. It's essentially a doji. Nothing happened. It just pretty much went up and down and stayed in the same place. So
Mm.
not a great day for trading because there's no news. Tuesday they had consumer confidence. So they used that news to be essentially take it down. Okay. And then on Wednesday, they had the Fed meeting, they took it up. Okay, see how much it expanded compared to these 2 days? It's
Mm.
because of FOMC. Okay, Thursday, again, unemployment claims, which is also a big mover nowadays, they brought it down a lot. Okay,
Yeah.
and again on Friday was NFP, they just carried the momentum forward and then they brought it down even more. Okay, so in this case, you could have expected that Wednesday would be the big mover. So if Tuesday does this, then you can expect the high of the week to happen sometime on Wednesday. Typically, if this unemployment claims wasn't there, it would have gone to Wednesday, and then it would have just come down on and the low of the week to happen on Friday.
Hmm.
Okay, so this is how you anticipate the bias. Okay, so this is how you use the calendar. Okay. Now let me delete this. Let me go to the next week. Okay, next week there was nothing. Something on Monday. Monday had news. And then they had news on Thursday. Stay, stay, stay. Right. Okay. Okay. So Monday there was some news, some PMI. Okay. But they used that to drive the market and then they just brought it up again. Okay. So Monday, Tuesday, nothing, just a doji. Nothing happened. Okay. Wednesday, practically nothing. It just a bond auction. Again, nothing happened. They just used it to go up and down. Thursday, unemployment claims. That is when you see the movement.
Hmm. Now, if the unemployment claim was not the thing that we like, then it would have still gone down, right? Other than going up.
It could have gone in either direction, which is fine. But the point is that look at the amount of movement and how it stayed up.
Uh,
Right? All of this is essentially saying that, hey, I'm not decided what I want to do in the market. I'm just going to take the liquidity out. I'm going to take anyone who wants to trade on these days. I'm going to come and take your money. Okay, why? Because they want to move things on Thursday. And
hmm.
again, you look at Friday, no news, nothing happened.
Hmm.
Okay, again a Monday. This is a Monday, nothing. Typically, Mondays are not great days for trading because they tend to have this kind of scenario. Let's see what happened in the next week. They have PPA. Okay.
No, no.
Again, look at the calendar. Monday, nothing. Okay. Tuesday, they had news. They moved it. Wednesday, normally CPI. CPI moves the market a lot, but they just manipulated it. Okay. But they pushed the manipulation to Thursday on some random news, some retail sales. They just use that to move it. But again, because there's news. Again, Friday, nothing interesting. They didn't move the market. So the idea is very simple. When you have these red folder news, that is when you can expect movement. Okay. And you can use that to essentially build up the direction and figure out, okay, which direction do I need to trade and what makes sense to do. So what you will do is normally you will pair this with the analysis that I was talking about last time about the higher time frame PDR rates. Okay. And then say, okay, where is it marching towards? Is it marching towards old high, old low? Is it marching towards FVG or volume imbalance? And then you figure out because it has gone up like this already. Most obvious place that it wants to go to is here. This high. So it's slowly started marching towards that. It didn't reach it here, but it went the next week. It reached it,
Hmm.
and then market started consolidating and started coming down.
And most of these analysis are applied to like futures or indexes rather than individual stock, right? Oh,
Yes,
okay.
because individual stocks, essentially, the only thing that should ideally move the market is the news, right?
Mm.
Quarterly news
Uh,
or any press releases they release. Okay, but the news that you get directly, they say, oh, if I get this news, it'll impact this, and this company.
mm,
So what they do, they essentially go and buy the index, which comprises of those particular companies. When they buy those, market goes in that direction, and accordingly, the index goes up. So, so they use the news to actually manipulate all the stocks.
mm,
In the rare cases, like big companies like Tesla or you know, uh, what do you call it, Nvidia and things like that, those move the market like crazy sometimes. Just like that, without any rhyme or reason, because people are just keep buying into the hype, and they keep buying and buying and buying. So
mm,
sometimes it just keeps going up, but that is typically rare. Well, I wouldn't say rare. It does happen, but but that's like one stock out of so many stocks, and that too it happens just for a short while.
mm,
Okay, so the same thing you keep applying everywhere to any week. Okay. I would suggest you guys try this. Okay. Just go to forexfactory.com, go to a random week, look at the news, and try to see, okay, what happened. And you will see that it will always coincides with the news. And that is the day that the market actually moved.
mm,
Okay. So once you know that, then it starts becoming a lot more easier to figure out, okay, these days I need to trade, these days I don't have to trade. And on this day, I can expect an expansion. Okay. For example, this week, what is happening this week?
So daddy came.
It's Friday already. Okay, just leave it here. Okay. So if you look at it, Monday, Monday, not much news. They just kept it in this here only. Tuesday at 10 o'clock, consumer confidence, not a great mover of the market, so not much movement. But they were essentially this week, Nvidia earnings was a bigger news than anything else.
mm,
Okay. So they waited for Nvidia earnings, and then they essentially decided that it's not going to be good, which is essentially what everybody was going to know as kind of expect. So they brought it down in anticipation of that. Okay. And then see today we had unemployment claims at 8:30. That's the reason the market went up. Okay. We went up, took out some of the liquidity that was there, and then came back down again. Friday, 8:30 tomorrow, there's core PCE. That'll move the market a little. So we need to see if they're going to use that to move the market completely in this direction and take out all the stops here, or come down, take something more. They may want more liquidity from down to go up, They may do that also, but so target would probably be this, at least bare minimum. So the two ends of the candle are the essentially the targets. They might come and take both sides. So depending on which side that they take out first, we'll have to see. Then it'll probably go, market will go in the opposite direction, quite likely.
So the multiple factors, right? One is how actually the core PCI is, and what are the intent of the hedge funds are.
Yeah. Yeah, but most of the times what they actually release doesn't matter. They
Mm,
just they are hell bent on taking the market into a particular place. They
mm,
just use the news release as a means to go there. That's it. And most of the time, these numbers are known. They already have an idea of what are the numbers that's most likely to come out. So they know it's going to be bearish or it's going to be bullish, and they'll manipulate the market accordingly.
mm. Yeah, I'm sure with all this information, they would at least know the unemployment news leaking, right? Bear or bull kind of thing. So,
Yeah. Well, they know everything. I tell you. Okay. So, okay, so this is what are the weekly profiles. So, weekly profiles are also something that you need to look at to try and understand what's going to happen in a week. Okay. So, the next thing I wanted to cover was essentially daily profiles. Similar to weekly profiles, there are daily profiles also. Okay. But before that, um, need to tell you about kill zones.
Killzones.
So, what are kill zones? Okay. So essentially, since trading happens the whole almost 24 hours a day, right? So that means that, but it's not happening in one market, okay? Because people are sleeping in some parts of the world. So basically, trading is global, okay? So what typically happens is market opens at 6 o'clock, New York Eastern Standard Time. Okay, so that is the what they call the global exchange open. Okay, or Globex Open. So that is where it starts. And initially, it's all about Asia. So Sydney, this part is essentially Sydney. Okay, and then Japan and Hong Kong and Singapore all start coming in, and then London starts around somewhere around 2 o'clock. Okay, and then London continues all the way until basically New York lunchtime. Okay, somewhere around here. And then evening session is only New York. Okay. So what ICT says is that, even though the trading is there happening completely all the time, you cannot trade all the times because there are certain times when there is a lot more liquidity in the market, and so the market moves a lot. Okay, and he defines those periods of time as kill zones. He says you should trade only during those times because that is when you can actually have proper price discovery, and you will actually be able to make enough money. Okay, so he says that in Asia, kill zone starts at 8 o'clock to essentially close to midnight. Okay, and then London starts at 2 o'clock and ends at 5. Okay, and then from 5 to essentially 8:30, he says is no man's land, you shouldn't trade. Okay, but and there are exceptions, you meaning there's still a little bit of movement, but sometimes it will not do anything because usually what happens is that they're waiting for 8:30 news to hit. So normally you can actually start trading from 8:30 onwards. Okay, so And then 9:30, of course, New York opens. Okay, so New York session opens, and then between up to 11, he says, and then between 11 to 12 is when London starts shutting down. So that means they start unwinding their positions. Okay, the London traders will start unwinding their positions. And then New York lunch, he says that is basically no trade zone. He said never trade during New York lunch because they just run liquidity at that time. So he says don't do that. And then he says there's a New York PM zone which starts from 1:30 up to roughly 4 o'clock.
Hmm.
Okay,
So sorry.
mm,
New York AM from what time to what time is a good time to trade, and
9:30, 9:30 to 11.
9:30 to 11, and then we should avoid up till PM.
Yeah,
PM starts at
PM starts at 1:30.
okay.
Okay, so even if you look at this, right, you can see the amount of movement that happens. New York movement happens, a lot of the movement happens only in the New York AM kill zone, right? Lunch, hardly anything. In between, hardly anything. And then again, PM starts, then you see a lot more movement. Okay.
Hmm.
Normally, even London, the actual move starts in London, so you can set up, you can enter a trade here and try to hold it up to in New York.
So
Okay.
this markets, London, Asian market, trade on Nasdaq, or it is local markets that is impacting Nasdaq?
They trade on their own exchanges, I think, or through their exchanges. I don't know. I don't really know. But effectively, all the trades come and terminate at in the there's a CME thing who actually host all these indices.
Hmm.
So it gets consolidated all the time. But yes, it's quite possible there might be exchanges which actually host it during in their own time zones. Hmm. Okay. So again, if you look at it, right, the previous day, Asia hardly any momentum. So normally not again London, there's momentum here. It's a fair bit of money that you can make here. And then again, you can see volatility in New York AM. Nothing in between. Again in New York PM, you can see volatility. Again New York AM, you can see volatility. London again a small uptick here. Yeah. So there's an indicator that I use to mark these. Okay, it's called ICT Killzones and Pivots by
Hmm.
TFO. Okay, I put it in the sheet in the presentation. Okay, which is almost in the second slide or something. Okay, now, okay, I'll go back to the slides now because I want to explain the daily profiles. Okay, so in this slide, essentially, it talks about the same thing: forex and indices, skill zones, and sessions. You need to worry only about the indices skill zones because you're not trading forex. Okay, so these are the timings that you will use. Okay, a little bit more information in the slide, but for now you don't have to worry about it. Just take a look at it. Okay, okay. Now, why are daily profiles important? Because daily profiles are what you will finally use for trading. No, sorry, I wasn't presenting that. So I was talking about this slide. So this slide has the timings. Okay, there's one more slide also I had here. It also talks about the kill zones. Okay,
Hmm.
I will talk about these macros and things like that later. Don't need that right now. Okay. So essentially, daily profiles is what you finally end up using to figure out the trading. Okay, the idea is very simple. They keep talking about this sentence. If London does this, then New York will do this. Okay, So you will essentially see, look at London and then decide what you want, what is most likely to happen in New York. Okay. So if London reverses, then New York will distribute. If London consolidates, then New York will manipulate it. If London expands, then New York will basically consolidate and not do anything. Okay. So these are the different profiles. Okay. So this is a London reversal. So London essentially reversed, came down, and then reversed, and then New York essentially continued. Okay. So you're looking for these profiles, and you essentially look at each kill zone to figure out what is actually happening in that kill zone, and then you decide what is most likely to happen during New York AM. Okay. So this is tricky, but this works. Okay. The second profile is basically New York manipulation. So essentially, if London is essentially consolidating or has a very small movement, what will happen is it will come, take out the London high or the low, and then go in the opposite direction. So that's why it's called a New York manipulation. Okay. Most of the time, this happens simply because there is news at 8:30, and that only happens closer to New York Open. So until then, everybody is just sitting around waiting for the news. Okay. Last one is essentially New York reversal. So London happened, and then New York came down all the way down, and then it reversed in the opposite direction. Again, most likely because of news. Okay. So what is actually happening is this leg is essentially the manipulation, forcing people to think that we're going to go lower. Comes in, New York will come in, and then take all the sell orders, and then finally they'll just go up and break all of the buy stops that are resting here, take the liquidity and keep going up. Okay.
Hmm.
Meaning you will not be able to, understand this immediately, but just remember that there are these profiles.
Okay.
Okay.
Yeah.
Once you know that the profiles are there, and then you start looking at your slides, then you'll start seeing, oh, okay, this makes sense. Okay.
Mhm. Okay.
Okay. For example, this one. New York and London were consolidating. So what happened? New York came in and went in the opposite direction. Okay. So this was essentially the New York or manipulation profile. Actually, it should have gone up, taken out London high, and then come down. Then it would have been the perfect profile. So here also, if you look at it, came, went up, manipulated up, came down, took out the London lows and the Asia lows, and then went up again. This is actually one of the trade ideas you normally have. So what you try to do is you essentially target uh, most of the times London high or London low, and from where you are, and then figure out when are they going to go to this level. So in this case, if you had taken a sell here, if you had sold somewhere around here, your target could have been London low. So you target that, and then you let the trade run until it hits that target. In this case, it went a lot lower, but normally what I think London low is where it tends to manipulate towards. Okay, then it came here, then went up again. Okay, hmm. Okay, London consolidation went up, and New York expanded down. So this was the London reversal
Okay.
because it just kept going up, right? Went up, so New York decided, let me go in the opposite direction. And this was just a okay. Seek and destroy. Just went up and down, up and down, up and down. But again, what happened? Yes, he came, took out these all these lows and highs, and then finally came down and took out London low and Asia low. Came almost took out London high and then came down. So you need to map each one of these profiles, then you'll start seeing what is actually happening. Okay. And the more you study this, then the more it'll start making sense. And then when you start using it in the trading, then you'll start seeing how to make it happen. So, for example, normally what you could have done here is that you could have expected that, that they're going to take out the London low here. Okay. Because they want to take out those lows before they decide to go up. This is one of the profiles. Okay. And then you would wait. Even though it came close enough, that's good enough. And then you wait to figure out, okay, now I can take a trade because now I know that it's going to go in the opposite direction. And normally this happens at 10:30. Yeah, around 10:30. So you can keep looking at all of these profiles. You'll start seeing that there's a pattern. See here also. London consolidation, took out London low, took out Asia low, went in the opposite direction. So London already expanded. So New York is low probability. It just stays within the limits, within this high and low. Okay, so New York would have become very difficult to trade. Okay, especially if you see a huge London expansion like this, normally you can expect the consolidation during New York sessions because they've already moved the market a lot. So there's nothing more to do, but they need to go and take these out. Then only they can get the liquidity, which they finally did in Asia here. Okay, but they didn't have the energy to go all the way there. Oh, this is classic. This must have been a news event.
What is this indicator, Vinay? Because in your notes, I'm not able to find
It's
this.
right there in the second slide or something. It's called ICT Kill Zones and Pivots by TFO.
Okay.
It's a free indicator.
ICT kill zone.
Yeah, kill zones and pivots.
Yeah, I click on it, but I was not able to add them. Should we?
That's probably because you have that basic plan. You can't add too many indicators in it.
Oh, I see.
Sorry, ICT kill zone by what?
A-
And
And
pivot.
pivots by TFO.
Oh, okay. Trader for op.
Up.
Yeah,
Okay.
trader for opportunity, something. It's called.
Okay. So the maximum indicators on my plan I can only add is 5. Okay.
With this is a paid plan, right?
Mine is kind of a paid plan, yeah, but not big plan, like normal plan, I think. You have premium, is it?
I think so.
Yeah, because you have many indicators there.
Yeah. Yeah, because you just wait for what is it? November end, Thanksgiving. They have
Mm.
huge sales. It
Hmm.
gets really, really cheap. Then that is when it makes sense to buy.
Mm.
Yeah, buy no point buying earlier, to be honest. Wait for that.
So ICT, kill zone, and pivots, I added. It just says Thursday, Friday, Monday, Tuesday, but you
Yeah,
are getting
you have to go
you.
inside.
Uh,
and you have to say show kill zone boxes.
Show kill zone boxes is enabled.
Yeah,
Display
check
text
out.
is
Yeah, but look at your time frame that you're on.
time frame, session drawing limit 30 minutes. America,
Yeah,
normal.
but what is the time frame of your chart? It was on day, right, at that time.
Yeah, what should I keep?
It has to be less than 30 minutes.
Oh, okay, okay. So 5 minutes it shows up.
Yeah.
Okay, okay.
So this is a useful indicator. Okay, because first thing that I normally do in the morning is just this. I open up this, figure out what has happened in London and in Asia, and then that tells me what might happen in New York. Okay, so for day trading, this is typically the first one that I use. Apart from that, I normally do the weekly analysis and try to figure out what is the weekly profile that is most likely to happen based on what news I know is going to happen that week.
Hmm.
Okay, and then use the higher time frame analysis to be able to say, okay, fine, these are the PD areas that they are most likely going to target, and then figure out, okay, in which direction it's going to go. And based on whatever happens on Monday, then you can figure out what's going to happen the other next few days. And if there's a news midweek, then pretty much until then, you just look at your daily profile to figure out how to do some basic trading.
Okay,
Okay.
so I should take London evening hours, is it?
Yeah. I think if you just by default, it's all set up, so you don't need to do anything.
No, like whenever I'm reading the chart,
Hmm.
I should take London. H means London evening, is it?
London high.
London high. So I should take London high as a reference.
Yeah, London high and London low. So basically, it tells you the average range, right? Tells you
Uh,
what is happening. If you look at this example, this is pure consolidation,
hmm.
right? If it is pure consolidation, then that means New York will manipulate the range, complete range. So in this case, it went up, came down, took both sides of the range, and then manipulated down.
But if it is
And then it
London
went up again.
high, automatically even New York would take it high.
Not always. So that is why you need to look at each profile and then figure out which profile makes sense.
Hmm.
Okay, so based on that, you need to see because essentially it's like this, right? There are only three things that can happen. One, it'll reverse whatever happened during the night, right? So if London goes high, New York will try to manipulate that. So it may go low. Okay. Or or the news may be such that, or the reason is going low is for some reason, then that means that New York will essentially continue the same direction.
Mhm.
Okay.
Hmm.
And if London expanded a lot and then took out the drawn liquidity, right?
Mm.
For example, it went and already took out for example, the daily FEG it took out, then that means you can expect that New York AM is going to manipulate and just go down from that because it already took out what was the expected on liquidity.
Mm. Yeah, makes sense. That is what it did today.
Yeah,
So New York kind of manipulated and then it took it down.
yeah.
So it's been okay.
Okay, for example, I'll exit this. Let's go to. Mm,
If London is high, New York will bring it down.
mm,
Okay. Yeah, I'm checking 2 days and it's like playing, right?
yeah, okay. So normally what I have is something like this. I have a chart like this, which essentially looks at all the time frames.
Ah,
Okay. So I have weekly, monthly, daily, 4 hour and 1 hour. Okay, for referring. Okay. So this is what I used to figure out. Okay, what the hell is happening in the market to begin with? Okay, for the higher time frame analysis. You see, I have marked targets here, which are most likely to happen. Then I try to figure out what is happening here on a regular basis. Let me get rid of this. Okay, for example, weekly chart. Okay, so what actually happened is went up here. Almost there was a weekly FVG here. So that is kind of what Nasdaq was trying to target. Went close enough, but they couldn't close the distance because there was probably not enough liquidity for it to go higher and close the distance. Okay, and then but it left a weekly FEG below. So it decided to come down, take the weekly FEG in. Okay, so if you look at it, what actually happened came all the way almost to the midpoint of the FEG. You see
Mm.
it?
Mm-hmm.
So it came all the way down now, and then it's slowly going up. Okay, so most likely we need to see what the next week will do. If the next week opens lower than this, that means going all the way down. Okay, but if the next week decides to go up, that means it's going higher. It's going to go and take this liquidity and keep going higher, most likely.
Mm. How do you see this in the daily one? Huh?
Remove the weekly FE. So daily FE, daily. Okay. Came down, took out, it wanted to take out all of this liquidity on the daily. That's what it did. And I think there's one small volume imbalance here. Okay, which it came, took, and then started going up again. So tomorrow it is around here. So see, but see this. This one came down, even though it came down, it closed above, right? It actually closed here, above this. So most likely this is going a little more higher.
Uh,
Okay, how high? I don't know. Like I said, there is a lot of liquidity here. It needs to take that out. It may take that out and then just go up, and then the target is going to be ultimately there's this daily FVG also, and also the weekly FVG on top that you saw. So this weekly FVG that is there here, it's probably going to come and take that out. Okay, because now all of this is liquidity which is lying here. It may come, take all of this out and go. But it may not happen immediately. It may take a few weeks or a few months.
hmm. But there's an inflation news tomorrow, right? So probably it
Yeah.
might go up and.
It might go up, but it's still evening. We need to see what they do. If you basically uh, they if they decide to manipulate, they may expand during Asia and London and then bring it back all the way down. And they may, if they start coming down even further, then the target is going to be this daily FEG, which is here.
Hmm.
And then after that, this one. So they have these gaps left. So we need to see what they want to do with these gaps.
Hmm.
They may want to come take out all of this liquidity and then go up as well. Okay. So few parts is go up, take this liquidity, and then come down all the way, then take out all of this, and again go up all the way. So different possibilities, but we need to see what they will try to do. Like most likelihood, they're gonna go higher. That is my that feel. Let's see. So it could happen either tomorrow, but tomorrow is already Friday, so normally Fridays are not great. I don't think there's any news either tomorrow. Okay, there is some core PC price index at 8:30, so we need to see whether they will use that to do something. So they may use that news to take this out and then take it down again. And then this is the 4-hour fair value gap. Sorry, 4-hour chart. I use the 4-hour chart to get a better read on price. So if you can look at it, came today, came filled the 4-hour FEG, here, went up, hit this area again, made a triple top, and then immediately they sold it. Came, there was this gap here. They came to this gap, the 4 hour gap, and they filled it almost completely, and then they went up and settled somewhere in the middle, I guess. Yeah, almost. See, they closed almost 50%. This was the whole range from Wednesday to Thursday, closed somewhere in the middle. So, see, it works here also. They come to discount, take the liquidity, and then they go up. And if you want to fine tune it even further, then you use the 1 hour.
Mm.
Okay, so you wanted to know what is this plus and minus, right?
Yeah.
Okay, so essentially, the PD arrays are either in premium or discount, right?
Hmm.
So they're essentially called then bearish PD arrays or bullish PD arrays.
Hmm.
Okay, and bullish PD arrays are essentially arrays which are created when the momentum is bullish. Okay, so that means they will act as resistance, or they will support price when it hits that particular value. Okay, so that means that price came here. This volume imbalance and this FEG in particular supported the price and made it go higher. So that is why it's called a bullish PD array. So anything with a plus is a bullish PD array. Anything with minus is essentially a bearish PD array.
So bullish PDRA happens when? Sorry.
When it goes higher.
Oh, okay. So volume imbalance when it is going higher. Okay.
No, volume imbalance or FEG or order block or breakup block or mitigation block, any
Uh,
of the PD arrays. They're
mm,
either bullish or bearish, okay, depending on whether they're going to support price or thing. So if you look at it here, on the way down, they have bearish PD arrays.
mm,
So they use the colors also to indicate it. So they will not allow price to cross it, or they'll offer resistance to the price to go further. So that's why it's a bearish PD array.
So then for every bullish PD array,
Hmm.
which is volume imbalance, there would be one negative on the top, is it? Or no?
No,
Because when you spoke about support and resistance,
yeah. So it's
are they?
basically, no, look at it as left side and right side of the curve. Okay.
Mhm.
So because yesterday, last week we talked about uh, MMXM, right? So this is what is this thing called? Which side of the curve is this? What are they doing here?
They are bringing it down.
Or selling, right?
Yeah,
So this is the sell side of the curve,
ah,
sell side
right?
of the curve. Okay.
Right. So all the PD arrays that are formed here are going to be bearish.
mm.
Okay.
So this is buy side of the curve.
This is the buy side of the curve. Specifically till here, right?
Mm.
All of these are bullish PD arrays.
Mm.
This is a bullish order block, right? This is a bullish order block, bullish fair value gaps and volume imbalances. Okay, and the minute it starts coming down, it's a bearish. Okay, so if you want to basically do the replay, now it'll probably start showing. See, now it's all red,
Ah,
right? So that means it's bearish.
Mm.
Okay. So what I figured out is that it doesn't matter. You just meaning as long as you understand this idea, right? That will offer support or offer resistance depending on from which side of the curve it is. Then then they have special. He has special names also. He calls them BCs and CBs and things like that. It just makes it more complicated. Just call them fair value gaps or volume imbalances. That's
So
good enough.
volume imbalance, fair value gap, buy side imbalance, sell side
Yeah,
volume, something,
yeah,
all that,
yeah.
all means the same, is it?
All the same. It's just fancy names. They become more complicated, so I stopped referring to them because why should I call it a CB or a BC and tougher on the tongue? It's an alien language, and I don't understand it. If you have to tell that, if you just say if it's a fair value gap, oh, it's a gap. Okay, fine. Depending on where it is, or in this case, which color it is, you already know what it's going to do. So that's good enough.
yeah,
Why unnecessarily complicate yourself with that complicated terminology?
Mm.
Because this guy also does marketing, right? End of the
Yeah,
day.
yeah.
So he wants to create his own unique language. So he just keeps thing. I think there's a reason why he calls it that,
Mm.
whatever he calls. Okay. But it's just too complicated terminology for us.
Mm.
At least for me, that's what I thought. So I simplified it and they said, oh, it's a gap. That was all it matters. Even volume imbalances and all doesn't make any difference. It's just the way it gets formed, which is specific, but it's still a gap. End of the day, it's a gap.
Mm. Okay.
okay.
What's the difference between true gap and gap plus inefficiency? Have you covered it or?
No, don't worry about it. I think basically they have different ways of trying to, put those gaps and things like that for the calculations.
Mm.
So for example, right here in this case, you can have a gap which basically starts from here and all the way till here. Okay, so this is one huge gap, right?
Mm.
Or you can basically say, oh, I have actually have a fair value gap somewhere around till here, and then from here to here, I actually have a volume imbalance.
Mm.
Why bother about so much of intricacy,
Okay.
right? It's a gap. That's all you know, and that's all you care about.
Okay.
Okay. So,
Perfect.
meaning as long as you can recognize the gap, right, it's good enough.
Mm. Okay, Vinay. Perfect.
Mhm. Okay. Any more questions?
No, no.
Oh, good, good. I think
Okay. So the thing is, there's a lot of things that I'm talking about, right? So it's essentially to set the language.
Mm.
Okay, that's how you need to view it because and I'm capturing pretty much all of the ideas what has been presented in these slides. Okay, so you can just refer to these slides as a quick ready reckoner. That's why I haven't put too much information either.
Mm.
Okay, just the relevant information is there so that you can take a look at it. And then what we'll probably at some point of time is we will start getting into more details about how do we analyze these charts. Okay, what do we expect to look, what is going to happen next week.
Mm.
right? That kind of a thing. We'll finally come to, discussing that or on a daily basis. Hey, what will happen tomorrow?
Hmm.
Okay. And then we will use all of these to be able to try and see, okay, what makes sense.
Mhm.
Okay. And in most of the times, it's like you'll be right 50% of the time, and sometimes you'll do this and then go the other direction also, which is fine,
Hmm.
which is okay. But the idea is that you need to get to a point where you can start anticipating things. Okay. And then based on that, then you can decide to take a trade or not take a trade.
Hmm.
Right. And then there are very specific entry patterns that we can use. Okay. And based on those entry patterns, you need to actually take your trades.
Hmm.
Mm.
Hmm. Hmm.
Okay.
Hmm.
So the remaining things that I wanted to cover was one is macros because they talk about macros a lot. Okay, in ICT. And it's a very simple idea, but then you have to actually see it working in action.
Mm.
Then you'll understand why it makes sense. Okay. And and a few more things like I want to cover the new week opening gaps and new day opening gaps because they talk about it. It's a useful thing, but you don't need to use it in trading. But it's just a good to know. Okay, so that you're aware of it because it acts as a magnet for price.
Okay.
Okay, so it's useful to know because sometimes you see the price stopping randomly and you don't understand why it's stopping randomly. And then when you go back and see, especially when you're trading, right? And then you'll see oh, there's a specific gap there that it is trying to, which is acting as a resistance or a attraction for price. So it
Hmm.
just gives you a lot more information.
Mm.
Okay, and but we covered, I think, almost 60% or 70% of the language so far.
Yeah.
Okay, so hopefully, maybe another two sessions or three, worst case. Okay, then we'll be done with the language part.
Hmm.
Okay, and then we will actually have to spend more time on the charts to actually do the analysis and then figure things out and try and anticipate what is going to happen and things like that. So
Mhm.
at which point of time, let's figure out how we want to do that.
Okay.
Hmm? But I
Fine.
think this much information now that you have, you guys should try and do the analysis. Just try and open the charts every day for
Hmm.
10-15 minutes at some point of time. Just try to do a very high level analysis and try and see if any of these concepts made sense to you.
Yeah. Yep.
Okay. So just try to relate it back to everything that we talked about.
Right.
Okay. And then that's normally what I end up doing. I just go back and then say, okay, fine. Why did it stop there? Then I go and try and find a PD array which made sense there
Hmm.
and things like that. Oh, okay, that's the reason it stopped. And you need to look at multiple time frames. Okay. Like how I'm using here, right? Multiple time frames to be able to figure out, okay, what is the actual reason why it stopped?
Hmm.
Okay. For example, today it stopped here simply because it came to this 4 hour fair value gap and pretty much filled up the whole thing and then said, okay, good enough, and then went up. Okay. Let me see if there's any other reason.
Vinay, I need to leave now.
Yeah. Okay, fine.
Yeah.
We're done.
Okay. Ciao.
We're done.
Bye. Bye,
हाँ,
guys.
चलो चलो guys.
Okay.
Okay, ठीक है, चलो विनय,
Okay.
thank you.
All right. Thank you. Bye bye.
Bye.